that up for the news. So that'll be it for our news segment for today. But yeah, just craziness. Craziness, craziness, craziness.
Just when you think it can't get weirder, something else just pops up.
Yeah, one of these nut jobs just jumps out of nowhere. So let's do this. So I want to talk about right now. There's a kind of a big labor movement happening in the U.S. for the first time in decades, and there's a lot of people striking, a lot of people trying to unionize, and we thought maybe we'd talk about kind of what's going on with that. You up for that?
Yep.
Yeah, that's all right. So let's dive in. So this is CBS News talking a little bit about it. I'll get the volume turned up here for you guys.
Being called the hot labor summer. From Hollywood to hotels, workers have been walking off the job. Recent data from Cornell University shows around 119,000 U.S. workers were on strike as of May. You can see a fraction of that were on strike in 2021 and 2022. And the demands from employees appear to be the same across different industries: better conditions, protections, and pay. For more on this, let's bring in Seth Harris. He was the former acting U.S. Labor Secretary in 2013 under then President Obama. Seth, thank you so much for being with us. So your alma mater, Cornell University, has found major worker strikes increased by more than 50% in 2022. The Labor Department says that's the second highest level in 2 decades. So what's going on?
Well, John, I'd say that there are 3 things. One is the pandemic, the second is profits, and the third is the political economy. Workers are very angry about how they were treated during the pandemic, particularly frontline workers. Mm-hmm. They put themselves at risk. Their employers didn't do everything they could to protect them. And so workers felt that the only way to protect themselves going into the future was to come together with their co-workers and organize. Profits at the same time rose dramatically. Think of Amazon, think of UPS. They were making money hand over fist, but they were not sharing that money with the workers who were producing those profits. And finally, we have very tight labor markets, very low unemployment rate, and a president who is very pro-union. All of that helps workers to increase their bargaining power with their employers. 4 million workers are quitting their jobs every month. That means they can go out and find another job fairly easily. That's their assessment. Well, if you can quit your job, you can strike, and there'll always be another job available for you.
So I think he did a pretty good job there. But that's the point, is for the longest time, labor has had almost no power. When the employers set the prices, they set the profits, they set the hours, they set the contracts, and now it's like, screw that. We've been getting screwed forever. But now it got really bad under COVID, and now people are just like, forget it. There's a big enough job market. We don't need this.
Yeah, honestly, why settle for whatever crap your crappy job is going to be giving you if you can, just go out and find another job that maybe has slightly better conditions, honestly.
Right.
So
no, absolutely. Well, and on top of that fact, it's time for people to start asking for more. We need to have better benefits. We need to have better pay. Better vacation time. Not to mention, let's talk about kind of the big elephant in the room. Maybe you should talk about this a little bit. Is like maternity leave and stuff like that. We're one of the worst countries in the world for maternity leave.
Right. I mean, there are Scandinavian countries that, allow people to get themselves, signed out of work for like 2 years, and it's perfectly acceptable.
Mm-hmm.
And here, teachers that I work with, barely want to take a month when they're actually entitled to more. It's
right.
Got so bad. Even the amount that we are entitled to, workers are actually afraid to take it.
Right. I mean,
You know,
there's just a lot of huge issues that we're just not dealing with, right? And then we've noticed this. We talked about this before. Child labor is on the rise in a lot of the red states. And that's going to be a huge issue. But it's like there's a reason we had child labor laws in the first place is because people unionized and fought back against that, right? But yeah, it's been tough for that, and we're going to talk about this a little bit. Let's talk about wages, and here's a clip because this is what's really driving this overall, right? Is that profits have gone up, income inequality's gone up, wealth inequality's gone up. Corporations are making a ton of money, the wealthy are making a ton of money, and the rest of us are at the same level for the last pretty much 40 years.
right?
I mean, honestly, if you're working a day, you make less money than your parents made doing the same job. I
Yeah,
mean,
that is not encouraging.
no, you make definitely less money than your grandparents made doing the same job. And they were less educated than you and less productive.
I was going to say, let's add on top of it the other economic factors. Okay, so you're making less than what your parents were making, and you are being required to have a higher level of education in order to do the same job for essentially the same or less money.
Less money, yeah.
And that education is requiring you to have a debt load that your parents and essentially the previous generations did not have to have.
Never had to have.
Never
Yeah.
had to have.
Nope. Nope. You got to work twice as hard for half as much. It's kind of what it's come down to. Oh, hang on. Let's do this.
That's why the middle class is feeling squeezed. The first reason is stagnated income. Between 1970 and 2018, the middle class share of aggregate income fell by 19% in the US. In comparison, the share of aggregate income for upper income households saw a rise of 19%. Another study by the Brookings Institute found that income in the middle class has grown half as fast compared to both the bottom 20% and the top 20% of income tiers once taxes and transfers were taken into account.
If I stay at a company for a while, my income becomes stagnant. It increases by a couple thousand. I generally have to job hop to have increases in my income,
which goes back to that last guy's point, which is you have time now because there's more jobs. 4 million people can quit. You can quit and job hop, right? You have now the ability to unionize and do all that. So
there's really no incentive to stay with a company anymore. Honestly, I mean, her point is really, really valid. Companies, spend so much money training new employees. It seems it would be in their better interest to just give appropriate increases to the ones they have, rather than spending so many resources training new people.
Right.
But they don't do so, and so it becomes much more lucrative to bounce to another position. I remember before I started in education, when I was working in the banking industry, I was loyal to my company. I stayed there for approximately 5 years, when the truth is I would have done better to have quit and got the exact same job somewhere else.
Mm-hmm.
Even not even looking for a more elevated position, just doing literally the same position, because they would hire new people at higher wages that they were paying me with my increases. So I would have made more money to not be loyal to them, jump off that ship, and do the exact same job for another company. Another 6 months later, quit that job and do the exact same job for another company.
Right.
They got to stop and look at that. All of that time and money and energy and resources in training somebody to do that job over and over again.
Well, but
could just be funneled back into the same employees.
Right, but the thought process is the pay is so low, it doesn't really affect me that much, right?
Right.
When the question then becomes, well, what is the, like you said, what is, like, if we're thinking about it from a financial CFO perspective, right? I'm sitting there thinking about it. Okay, what's the cost of turnover versus giving people raises?
Right.
Right. And if you've got a short-sighted view of things, then you're sitting there, well, I'd rather just pay him $15 an hour or $10 an hour and just deal with the turnover, right? As opposed to a longer sort of view, which might be, well, maybe it's worth it to pay him 20 or $25 an hour so I don't have to deal with this every 3 months, 6 months, year, right?
Right.
But companies don't think like that because they're always thinking immediate profit margin. And that's the problem. They're not thinking long term always. So we'll go to this. So it's a little bit more on the wage stagnation, but that's what's really driving this whole thing is that wages suck. And like this whole thing, $15 an hour. If we'd have kept pace with inflation, minimum wage right now would be about 24, $25 an hour. But we haven't. Right now, minimum wage is $7.25 an hour. So we're fighting for $10 less than we should be getting. That's how screwed the system is. Just to give you a sense. Oh, hang on. Put mute off.
Wages in America have stagnated since the early 1970s, but it was 1979 when the gap between workers' productivity and wage began to substantially increase. Between 1979 and 2020, workers' wages grew by 17.5%, while productivity grew over 3 times as fast at 61.8%.
It's not true that wages haven't grown at all. They have, but they haven't grown as quickly as they had in the past. Since the 80s, the economy's changed a lot. We've gone really from an industrial era to a tech era. When you have these big changes to the economy, sometimes the gains are not equally felt, but it really has an impact on everyone's lifestyle and everyone's wages.
Wage stagnation is worse for lower and middle income earners. The bottom 90% of American workers...
I want to look at this for a second. Look at this. The top 1% since the 80s, right? They've increased almost 200%. Their wage, just annual wage. The bottom 90%, right? Everybody else, that's you, me, everybody else, most of us. Less than what, 30%? Around 30%? Think about that. You're getting a smaller and smaller cut of the pie. And you're 3 times more productive.
So you have 3 times more work to do, and then let's stop and look at the other side of your personal economy. Your rent payments haven't stayed the same, right? Like
Nope.
they haven't flatlined.
They're going to look at that in a second, but yeah.
Increases come in every single year, not to mention all the other things you pay for.
Mm-hmm.
Those have not flatlined either. So you're supposed to put in 3 times the amount of labor for wages that aren't increasing and then pay out more.
Right. And part of that is the labor, you're more productive because technology is moving faster, right? But you have to have the skills to use the technology, which means you have to study longer for a lot of those kinds of jobs. So we're going to get into that here in a sec. But yeah, but I just wanted to pause on that just to see, just so you guys can see that again. It's look at the top 10% have been crushing it over the last 40 years, especially the top 1%. This is where the problem is, right? You have all these wealthy, there's not a lot of them, but the wealthy people are getting wealthier and wealthier and wealthier, and we're getting poorer and poorer and poorer.
Yeah.
Saw their annual wages increase by 28.2% from
less than 30
to 2020, while wages for the top 1% increased by 179.3%. Meanwhile, the top 0.1% saw an astonishing growth of 389.1%.
Yeah, so they're ultra wealthy.
Wages, which means that after we adjust them for inflation, has not risen that much since the late 1970s. We know that, on the other hand, inequality did rise over most of this period.
I've been working since the 90s when I came here. That's about 30 years on and off. And there was very little raise for domestic workers. in general. Now, after the 2020 with the inflation, I feel like the income stayed the same. People lost some of the jobs, like in my experience, and we have to struggle to find different or secondary job or second part-time job just to maintain the monthly expenses of our daily living. It's very hard.
Despite causing severe
Yeah,
disruption.
she's not wrong. And that's where a lot of these strikes are coming from. That's where a lot of these people are getting pissed. I mean, it's devastating when you think about it.
Right? I mean, you shouldn't have to have 2 or 3 jobs if one of them is full time in order to just meet your monthly expenses.
Right.
You know, that shouldn't be necessary. One full time job should at least be able to meet your basic needs, and that's not really the case for a lot of people at this point.
Not anymore, no. Okay, so now we'll go into this where they talk about cost of living increase, like Lacey was mentioning a minute ago.
More so the top 0.1% took in much of the gains from the growth of the economy.
While incomes stagnate, the cost of living has risen dramatically over the years. To put it into perspective, the average household income in the US saw just a 16% increase over the last 50 years. In comparison,
Think about that. That's like amazing to me. Right? 15%. Right? That's nothing. I mean, we can do a quick...
Especially over that span of time.
Yeah. Let's just do inflation real quick. And we'll do 50 years. God, that's just amazing to me. So inflation...
Last time I looked up inflationary charts, 3% was the average. I mean, obviously some years more and less than others, but 3% on average on an annual basis.
It's 3.7 is what it is right now, yeah.
Right.
So 50 years, right? Just inflation, the cost of things in general, right, has risen 615%. Income is only 16. 615 versus 16. 600% increase in cost. 6 times what your grandparents were paying. That's amazing.
Housing costs increased by 190%, and college tuition shot up by nearly 264% in the same time period.
And that's the big one. These two, housing is doubled, right? So it's way more expensive to just live, right? Plus, most of these jobs, and we've discussed this before, over 70% of new jobs being created right now require some sort of college, whether it's community college or trade school or a 4-year degree or a graduate degree, whatever. But your cost of college has gone up and they're saying 264%, but it's like now that when you also figure out not just the cost, that's just the cost. The amount that the government funds and subsidizes has gone way, way down. So in fact, the average person today, and we've discussed this before, that like somebody in 1980, 40 years ago, or 82, 40 years ago, 83, we're paying 10 times more to go to college. Not just because of the cost, because the government doesn't pay for as much anymore.
Right.
So you're wondering why these people are striking and they're upset. They're broke.
But the 2 biggest payments people tend to have are their housing, be it their rent or mortgage, and their student loan payments.
Mm-hmm.
You know, those are the 2 biggest payments they have. And when you look at these numbers, that, you know, those expenses have doubled for housing and more than doubled for education.
Yeah.
With only wages just barely creeping up, right?
Yeah.
You know, you can't be surprised that people are ready to do something about it. You know, they're fed up, and you can't blame them for that.
Oh yeah, they're pissed, and people are striking. And like the guy said before, where you have enough, like 4 million people quitting their jobs, right? And every, what was it, a couple months or a year, whatever it was he said. But it's like when people quit and go get a better job, they're going to do that. So there's all this turnover, and that's why like they talk about the quiet quitting and all this shit, which is just corporate speak for, why can't we retain workers at the current price?
Right.
Because the current price sucks, and that's what we've been harping on it forever. But that's the problem: is people are underpaid.
I like to make a joke, and it's only funny because it's so real. I have a dollar amount that is my putting pants on dollar amount. I'm not bothering to get up and put pants on for less than blank per hour.
Right.
Because when you like stop and literally do the math on it, people want to blame workers for being lazy, etc.
Right.
But I think if you do the math on it, everybody has their pants dollar amount, so to speak. Like, it's not worth me putting pants on if it's less than this, because it literally doesn't become worth my time for it.
Right.
And everybody's dollar amount might be different based on their circumstance and what they do for a living, but you can't blame people for having that. They're not showing up to do your labor for nothing. If it's not actually, even meeting their basic expenses, they're going to throw up their arms at a certain point and say, screw that, it's not worth it for me. I still can't meet my needs on this.
Right.
Well, labor could just be undone.
Yeah, and when things get bad enough, it's the old joke in finance of you want good financial advice? Well, if you go get a 30-year mortgage at a bank, you spend 30 years paying all that off. If you go rob a bank, you do 10 years where you get to live for free, and if you hide that money, you get to keep the money. For more financial advice, give me a call, right? It's like, but yeah,
right.
When things get bad enough, people start thinking that way.
Right.
It's the whole joke about the drug trade, right? Especially the 80s, 70s, and 80s. And, you got guys doing 10 years for robbing 10 grand from a bank, right? And they're sitting next to like these drippy hippie guys who are doing a year or 2 years for moving $2 million worth of fucking weed. I mean, work it out. You're in the wrong business if you're still robbing banks. We should be moving weed. I'll do 2 years for $2 million. Right? Oh, man. Well, anyway, yeah, we'll. I mean, that was pretty much the whole point. It's gotten to the point where people are they're fed up, and this is why you're seeing the big labor movement, and that's what's going on. But we'll move on. Let's do some fun.